Welcome to Tradevision by Market Trade. So Bitcoin's on the move. What's next? This video will go over the repeatable process to answer that question. And the truth that when price is viewed through the lens of market structure, it reveals the tell of what the market is showing us it wants to do. We're going to focus on monthly structure, and we're going to start at the beginning of the month and show how Bitcoin price action teed up the event. Before we get into it, I want to do a little refresher for viewers on the intelligence that we have available at the start of the month. The important part to understand is the fact foundation is an objective truth. It's not a subjective opinion. Most subjective biases come when we're observing price action. The fact foundation is where the objective truth lies, starting with the time frame structure, then time phase, and then the base foundation is market structure, or what we call the PriceMap. So this process of focusing on the fact foundation first is where real clarity comes from, because we're defining the truth. So when we're making decisions here, it's I think this will occur, versus when we're focusing on the facts, it says I know this is true. Do I accept it or not is the question. I have the fact foundation here as a pyramid as well, as the base foundation market structure supersedes all the other events, all the other structures. Trade decisions need to be in alignment with the foundational market structure base. So let's go through the intelligence stack before we get on the market. So time frame structure is simply the previous period high, low, open, close, and midpoint. This is a fact. We can look at the previous day, week, month, quarter, year. It's the benchmark that all asset managers are measured by. How are we performing against the previous period? So we have this live price structure trading through static structure. And this static framework gives us context. Simple as we're above the previous period close, we're above the close, we're more positive. It's a strong bias. If we're short in this situation, we need to be aware of that because our risk is different. If we are in alignment with the context, then that just tells us we can maybe loosen up on some of our profit give back, risk management. Versus if the market, we have a strong move, but we're below the previous period close or the midpoint, it's weaker context. It's more corrective. So we're defining the landscape. The next piece of the fact foundation is the time phase. As the market goes through a trade period, daily, weekly, monthly, quarterly, yearly, it's going through the same phases. There's an opening phase, discovery phase, validation phase, and a settlement. We're going to focus on the opening phase. And what's happening there is the auction process is finding equilibrium at the start of a period. And that range is going to affect the whole period. The discovery phase is going to challenge those range extremes that were defined in the opening phase. And it's either going to hold that structure or it's going to transition and validate. And then that's we're currently in the validation phase in Bitcoin. And that's when the market makes a move. Is it true? If it's true, it's happening in the validation phase. And as we come near the end of the month, we drop into the settlement phase where funds are coming in to rebalance. Settlement phase during the daily cycle, you're dealing with margin selling up. So a lot of times the context in the settlement phase is a little wily, and then the cycle repeats itself. So the opening phase or opening range structure is going to be valid through the entire trade period, so through the entire month. And so during that opening phase, it's establishing a price high, a price low, and then we have a natural midpoint. So this is a natural momentum level. So knowing the facts, are we above equilibrium of the opening phase, or are we below it? Are we validating to the upside, or should we be cautious that we could see some price depreciation? Once we move outside this opening range, that's going to give price a complete direction. Until that time, the market's making a decision what it wants to do. So the price map is the base foundation market structure. There's a series of data-driven and qualified levels that define the price framework that make the current market state true. So these are the inflection points that validate if the state is going to persist and continue or break structure and transition to a new state. The power that it's a static benchmark. It doesn't change for the entire period. So the directional pivot is going to remain the directional pivot at the start of the month, and it's going to be the same price point through the whole month. And it's only going to change during the new month. It's a unified method that's applied the same across any market, any asset class, and any time frame. So I'm going to quickly go over some of the qualifiers, which can be viewed similarly to the time phrase and time frame structure. They provide a price and context. So one of the main price point levels is what we call our R level or reversal level, and this defines the sentiment bias for the trade period. Whether it be the day, the week, the month, each time frame will have its own R level. And it's really the over-under number. This is where the real liquidity and energy of the market is. This is what the market's focused on. And it's positive above that price point and negative below that price point. Where that price point sits sets the risk regime for any time frame. It's the sentiment bias skew. Next, the PriceMap creates a critical range with an upside pivot and downside pivot. So this is really the area of indecision. You can think of it as more non-trending, balanced, rotational, where this is going to be the top of the range, so it's going to act like a resistance, and this is going to be the bottom of the range, it's going to act like support. Again, this is all data-driven. It has nothing to do with anything subjective. The midpoint of that range, and not necessarily the symmetrical midpoint, is called the directional, and it's a pivotal point. It's a little different than the sentiment bias, where the directional is the rotational number within the critical range. So when the market's above the directional, it's leaning positive to challenge the upside pivot, and when it's below the directional, more negative to challenge the downside pivot. This is where you get a lot of rotation as the market's looking to make a decision, but it can also be the beginnings of where the market starts a big move. PriceMap also identifies opportunity by measuring the price segments that the market trades in. So if we look at the critical range as a major level, and we have the full PriceMap, as you'll see, we have minor levels as well. You'll see the market will trade in what we call average PriceMap distances. So the distance between one major level and the next. And that's basically, the PriceMap is telling you the market is paying out one APMD. Well, this is your objective for any trade that you're establishing near a major level. This sets that bias. And when you're entering those trades at the inflection point, your risk can be defined. And then you'll see that the market will move in segments of half APMDs as it works through this structure, with objectives of move being 2 APMDs as it kind of a normal trade objective. So when the market moves outside of that critical range, so when we're inside of it, we're fading momentum within the ranges until we're proven wrong. But then if we have a breakout, which is qualified by an alert the market was trading inside the range, and then a second alert that it moves outside the range, that defines this as a breakout. And so now the expectation is that we're accepting buy signals, and as long as the market doesn't move back within this range, the expectation it's going to trade higher. And since it's a breakout, the expectation would be a 2 APMD move. The breakouts can move from the directional as well. So these can be the initiations of a move, where the market will start trading below the directional flip. You'll get a breakout with an expectation of a 2 APMD move, which will also trigger a critical range breakout and then extend that for 2 APMDs as well. Those aren't the set limitations. In fact, there's upside targets 2, 3, 4 for extensions for event triggers. So basically, it's just a map of structure, and it defines your risk, and it defines your trade vision. Okay, so let's take a look at Bitcoin. And so here what I have is the previous month. So here's July, and what I've done is I've marked the first of the month. So what we're going to do is we're going to walk through the month, and we're going to use the fact foundation to identify what the context, the market is telling us the context is, and we'll view the market's tells with the price action within that hard structure. So we have the start of the month, and I've added on here with our chart integration. We have this available to define the previous month's high, previous month low, previous month's close, and the previous month's midpoint. I'm going to walk through the first week on each structure segment individually, and then we'll put them all together and we'll walk through the rest of the month. But it'll just give you a good sense of using these different tools. Obviously, public information is previous periods structure, and so let's just kind of walk that forward. So we can see the previous monthly close and the previous monthly midpoint are pretty tight. So this gives us this band of a momentum band. So basically with the time frame structure, if we're above the previous close, we're above the previous close, it's positive. We're below it, it's negative. The midpoint of the previous period gives us more context to, is the market going to try to make a play for the previous low, or is it going to try to make a play for the previous high? So that the midpoint is a natural momentum level that the market's going to work off of as context. So if we move this forward a week, what do we see happening? We see them immediately from the get-go. And again, we have this time frame structure at the start of the month. What do we know? We know that above the midpoint, it's going to be leaning positive. What else do we know? Above the previous close, it's going to be positive. So you had the market gets back above, tries to make a move. You get the classic squeeze. We're retesting the midpoint. This is the point here of decision. Is the market going to transition? Is it going to hold, persist with this positive momentum? Or is it going to transition and move? This is the whole point. We're identifying what is that context. So next I'm added the price discovery, the time phase structure. So here's the opening range. So for the month, the week is the first opening phase of the month. And so we have the opening range high, opening range low, and we have the opening range midpoint. It's always interesting to see how that structure aligns with price structure. So price structure, just monitoring the ebbs and peaks of current dynamic price action. And so now we've defined this opening range. And this is the area of equilibrium for this 1 week auction of price action. And then obviously it has nothing to do with this action because this is the action that formed it. So now let's put the base layer of the market structure foundation in. So the first thing that we're going to do is we're going to identify where is the sentiment bias. So the sentiment bias is above the market. What I just did is I added a metric boundary around the inflection point. So we know that this is the inflection point and this is the what we call the alert distance. So area of signal acceptance, as well as the variance boundaries. So basically anywhere within a variance boundary is basically at the figure. So the next thing we'll do is we'll add the directional, because the directional and the critical range. So let's put the variance on here and then let's add the critical range. This is our chart overlay. And so this gives us clarity, and we see a lot of different alignment happening with the price map structure. So if we take a look at the full critical range, by definition, this is the critical range. It's the area of indecision. This is the pivotal point, market trading above the directional. It's going to lean to make a play for the upside pivot. Below it, it's going to make a play for the downside pivot. And we know that sentiment is above the market. So sentiment above the market means we have a negative expectation into this is the upper extreme of this big range. So this is the key inflection point where there's a lot of energy because this defines the current state of the market. So now as we move forward in time, we're going to go into the price discovery. Before that, I'm going to add the minor levels within inside the critical range. So these are what we call validation levels, where when the market is telling us it's positive above the directional, what price point does it need to trade through to validate that it wants to go here, and that's above this price, which turns out to be the high of the opening range, which also turns out to be the previous high point here. So what do we know at this point? We know that the market is showing strength. It's above the directional. What's our expectation? If it's holding above the directional, it should go up to the upside pivot at least, which is also the previous monthly high point. But really the target is going to be the sentiment bias because that's where the real energy is. And this is the inflection point that changes the state. As well as if we trade below the directional, that's going to shift this market to more of a negative transition because it's going to be in alignment with sentiment. So currently, what are we doing? We're in this corrective situation because we're above the directional pivot, which is positive, but we're rallying into negative sentiment. So as we move forward, So I brought us to the end of the discovery time phase. So the market is basically testing the zones, the opening range, which is exactly what it did. It came up and retested the opening range high, which is also the top of the validation metric boundary. It couldn't validate. Then what did it do? It came back to the midpoint. Is it going to stabilize here and go? No, it failed. What does it want to do now? Well, let's go test the low end of the opening range. Basically, this is why it's called the discovery phase. And so it came down to near the figure, came back into the metric boundary, the signal acceptance area for the directional, which is basically this key momentum zone. It's the previous month's close, previous month's midpoint. This is it. You've got structural alignment. It's hold or fold. If the market is good, it's going to continue to correct. It's going to hold above structure. If it's not, it's going to break structure. It's very clear. And that's the whole point. When you're observing live price action within hard static structure, it gives real clarity to what's happening here. And when you're coming into here, this is a big value area. But more importantly, what your risk is and what our reward is. So at this point here, as the market trades under here, where our risk, we're definitely out. Market structure has been broken. If this structure holds, what's the expectation? This corrective trade is going to continue. And where can it continue to? It can continue to here. So just observing this price structure, the market's trying to trend, make higher highs, higher lows. At this point, the market breaks that price structure. But it has also already broken market structure here. So here's a first structure break, second structure break. Then it has a momentum level break. And now it's coming into the base. And so we have this negative impulse. Is this negative impulse going to continue and we're going to rotate lower? That's what we're monitoring. And then the market gets into this difficult digest, and then it starts to break this negative momentum. It starts to break these negative lower highs, lower lows structure. And now we're moving into positive price structure within market structure. And here we get a transition back through the midpoint of the opening range. So at this point, the fact is, we know the market held the directional. Fact is, we know the market wants to go here. Fact is, the market moves through the opening range midpoint as a positive trigger. The market starts to build positive price structure, and then we validate through the opening range. We have an opening range breakout. Expectation, the market is going to make a play for the previous month high, takes that out, and it attains the sentiment bias. So we spoke about average price map distances. So here is a half APMD move, another half APMD move, and here's a full APMD. And so we've had an APMD and a half is what we have. So this is the market likes to trade in segments. And here we have a segment and a half move. Here we have a test of the metric boundary. And so any longs established here, when you're looking to exit, this is basically any place in the zone is an opportunity to do that. And then the key thing on PriceMap structure is the market going to continue to climb the ladder. So with this move trading above the previous month's high, this is a major structural shift. The fact that we took out the upside pivot is key. And now, is this sentiment bias going to contain this move? Walking through the price map, the market rejected and held the price map level to the tick. When you see structure working, it's working, and it should be respected. And so here, the fact that we held here and we're back challenging it, we have to respect this. We don't want to jump in front of a train. And so let's take a look and see what happened. It broke out, and this is where we get a shift in state. So at this point, the market has told us all this stuff is no longer true. We're no longer just corrective. We're transitioning. So here's the market to date. And so based off the directional move, we had our 1-2 segment move attained. It also generated a critical range breakout above the upside pivot. That's 1, 2. So we attained our objective. This is just what's the market paying out. The price map is telling you what it's paying out. So a normal, it's going to trade in half segments. That's minimum. You're basing your risk off a full segment, but your expectation for a breakout or a trend trade is 2 segments. So a non-trend trade, 1 segment. Trending trade, at least you're going for 2. It can be more, absolutely, but you're going for 2. And so when we have follow through, the price map expands. So we know when the market attains a 2A PMD target that we're expecting it to pause, at least, especially after you have a big linear event like this. So this pause is normal. And where can it go if it stabilizes above here? Well, this is what the price map does. It's setting your expectations. It can go here. And every month there's an event. What if we have an event move? Where is the event move? Well, and definitely just giving you a sense of what your VAR is. What's the real risk? Well, where could it go? If you have an event during a month, it can go here. And we can look at the daily if we wanted to. And during this day, it approached those events for the daytime period. But then we have the weekly, and we're focused on the monthly right now. Okay, so let's get some help. So what I did is I loaded our AI agent, Navigator, and this Navigator has all the information, all the structure, access to all the full market intelligence stack, and we've downloaded all of our experience into it as well. So everything that I've gone over with you, the Navigator knows as well. The goal of the whole exercise was to go through and show you that everything here is transparent. You can go through this yourself, but then the Navigator can help to leverage yourself. You remain the operator. It's not going to tell you what to do. It's just going to display the facts for you. Okay, so we walk through the market intelligence stack. And so let's bring in some decision support. Make sure that we're removing all of our bias. I've loaded our AI agent, Navigator. And so the Navigator has access to all these data points. And it also has been trained on our full experience of over 40 years in the market. So it knows everything that we've already gone through. So let's ask it the question. Navigator, based on monthly structure, what's your read on Bitcoin? What's next? Here we go. Okay, so Navigator's going through the price action within structure. What's the monthly read? Up to the moment, Bitcoin transition this month. It opened with negative sentiment, rallied off the monthly directional, and drove it up through the monthly R level. Trading through R flipped sentiment positive, and the market is now in a confirmed positive transition, running as a buy R breakout. So we have the buy R breakout, where its price attained the UT2, 7,900, and then eased back to 77,330, well above the monthly R, and every prior period high, so the momentum is intact. What's next? One line decides it. Above the upper level 2, 76,190. So it's identifying this point as this point will keep the momentum intact. This is a pause to catch its breath, not a top. Holding here keeps buyers in control with the UT2, the 7,900 level. Clear pivot for the next extension. Where can that go? It can extend up to the upper level 4 or all the way up through to the UT3 at 87,440. If we fail below 76.90, and that would be the metric boundary, there's a longer pause. And we're either going to retrace back down to the UT1, 73.30, 380, or all the way back to the R level, which would be a deeper correction. And so basically, if it only retraces to here, that's a shallow pullback, and so the month has a potential to still end strong. If we retrace all the way back to the R level, it's full corrective pullback, and it's more likely a digestive trade through settlement phase, which is until the end of the month. So the read, upside target 2 is attained, positive transition confirmed, momentum intact above 76,190. That's the line. Hold it, and Bitcoin extends towards 81,820 and beyond. Lose it, and it digests back to 73,380. More likely back to the R level at 75.70 to consolidate for a very large move into the month end. So let's ask the Navigator another question regarding our position. Navigator, I'm long currently, and I'm looking to apply some leverage. Should I add some leverage here? Okay. Want to add leverage? You're long, the core is working, and you want to add leverage. Here's the honest structural answer. 77,296 is not the spot to press. Why not here? The price already attained the UT2 and is eased back. So we're pretty much in the middle between the UT2 and the upper level, second upper level. So after the target is hit, Basically, you're chasing the extended move. Your leverage goes on at a level, not at a gap after a target's been achieved. Where the leverage is earned, two clear spots. So the breakout press. So if we get above the UT2 and there's acceptance above it, that confirms an extension. So that's an opportunity to add leverage on that acceptance. And you're pressing confirm continuation, not anticipating it. Basically having buy stops above here. Or the pullback add. We get a pullback back down into this area. Price pulls back to the 76,190 second upper level, and it's holding momentum intact. That's your better price because your risk is defined. So basically buying the market off of this structure. Stop. You're long, so below the structure. If we get below the upper level 2, we dip below the variance, which is here at 75,749. That's the first structure break, and that's the line. So as long as we're holding this metric boundary, that's the aggressive buy momentum holds. Below it, price is headed back to the UT1 or the CRX. So don't add here at the midpoint. You can press the leverage above if the market trades back above the UT2, and basically your stop is underneath the metric boundary. But that's for any leverage. The core stays long, and the leverage is the first tranche as it needs that level, not the middle. So you can continue to ask Navigator to refine your position. You can question it. You could ask it news articles. You can drop in charts. You can do basically whatever you want. It's your assistant. It's going to take all the information that you acquire and all the tactics that you have, and you can ask it about those tactics, and it's going to frame it within the structured framework. And it's going to give you it's going to use this as the benchmark to give you the truth of what's happening now. So the key point in this video is to understand that the real truth, the structure never moved. And where price action is trading within structure is really the market telling us, does it agree or not? And it actually gives us the story of what it wants to do. And then with that structure, and we know we're at this structure point, and because we're here and sentiment is here, it gives us a trade vision. And it identifies where is our real risk. And so you can really wait for and align your tactics to occur in spots where your risk is really defined and your reward is greatest. And so, having this hard structure, really gives you clarity. You may not agree with it, and you might mentally repeat the 4 most dangerous words in trading. This time it's different. But you'll only do that so many times before you really start to listen to that clarity and say, this is what the truth is. I need to act. I need to execute. I need to do something. And I need to do it in alignment with structure and what the truth is. And what is that baseline foundation? So the fact foundation gives you that clarity. So we have it. If you need it, come get it. All right, enjoy your day.